Hey guys, we know that buying a home can be really intimidating and you're really scared about all the mistakes you can make during the process. We're here to tell you what mistakes you don't want to make and how to become a successful home buyer.
I'm Holly Haven.
And I'm Andy Haven.
Welcome back to the Haven Home Team. We are your no-filter North Texas real estate team, and we are here to not only welcome you to Texas, but to help you just become a Texan. So today we're going to start with common mistakes that first-time home buyers make.
Yeah, the 5 biggest mistakes to look out for when buying a home or becoming a homeowner.
Yeah, so we want to help you guys avoid those mistakes and make the process really simple and as painless as possible. Okay, so we have outlined 5 very common mistakes, and they're not in any particular order, but let's start out with one that happens pretty often.
The pre-approval process.
Oh, yes.
This is something that a lot of people, I think, kind of take for granted. They're like, oh, I can do it the month before I want to buy a house. No, this should be done as soon as possible. If you're even thinking in the back of your mind, I might move in a year, you should probably find a lender, get started on that pre-approval process. The faster you get going, the better it's going to be for you. A lot of lenders have something called a credit recovery program. They'll be able to look at your credit, tell you what you need to do to better your credit, and then help you get the best interest rate with your credit score.
Yeah, and a lot of times it's not even that we have bad credit, it's that we could have better credit that would put us in a better position. And if we're planning to make that first-time home purchase or even just our next home purchase, maybe 6 or 12 months down the road, it's really best to get started because we look at that credit karma or maybe your credit journey through your bank, and those numbers just aren't correct for your mortgage.
No, they go off of 3 credit bureau scores. So basically, if there's 2 people applying for a mortgage, you'll get 3 credit scores from one person, 3 credit scores from the other person. They'll look at your median credit score out of both of you and then go off of the lowest credit score. So if you have an 800 and your husband has a 600, no offense, man, they will go off of your husband's credit score, not your 800 credit score. So you need to be kind of looking into that. Make sure that you're looking at all of your options, look at multiple lenders throughout the process.
I agree, because your lender matters too, right? Going to a big bank where maybe you just have your checking account is not usually the best process. And it's because they do really great at banking, but they're not necessarily great at mortgages. So reaching out for a really strong referral, ideally a local broker in your local market. If it's VA or FHA, we have a lot of great referrals for those as well. But finding a local lender that can really dive in and educate you, you're not looking for somebody that's just going to take your application, tell you you're not qualified, and kick you out the door. We really want a lender that's going to say, hey, here's where it could look better. Here's what we could do if we went through these steps or processes to better your credit, and really put you in the best position to purchase. And doing this early, say maybe even three months is really ideal, right? If you're not sure you're really planning to move quickly, let's go ahead and dive in. But even 6 to 12 months makes a big difference to put you in the best position, because you could be surprised about your credit score, maybe your debt to income, student loans. We have a lot of factors that play in. So getting that information early is going to put you in the best possible position. Okay, Andy, a mistake that we see all too often is buyers that choose not to work with a realtor.
Big mistake.
Big mistake. I know. It sounds like we're saying that because we're biased, but to be honest, we've been through this process so many times. We work with, very small first-time home purchases. We work with multi-million-dollar homes. We work with new construction, and the process is different for every single transaction. Would you agree?
Oh, 100%. I have never had a transaction that was exactly the same twice.
Yeah. So we learn with every transaction that we do. And the fact that we get to do this all day, every day puts us in a position of understanding really how best to negotiate, where to find, the best properties for our buyers. And, we do get paid to do the job that we do. But the great news is we get paid by the seller. So the buyer, sometimes they hear like, oh, I'm gonna have to pay an agent, or it's 3%. They kind of hear these numbers. And a lot of times buyers just don't understand that in the state of Texas, we get paid by the seller at closing to help represent the buyer. So what does it really mean to represent the buyer in a transaction like this?
Yeah, so basically we're there to protect the buyer, negotiate for the buyer, and we are there to kind of make that deal for the buyer. Whatever you want, we'll write in that contract. That's up to you. We work for you. And at the end of the day, all we're doing is reading the contract, telling you what's in the contract, and then sending it over to the seller.
Yeah, we're able to run the comps. We know if the home we're offering on is priced appropriately. We know if it's priced below market, meaning we could expect multiple offers or maybe have to be really, really strong and competitive on our offer, or if potentially the home is overpriced for the market, which means we may not want to make a full price offer. We at least want to be there to educate the buyer because we have data that the general public just doesn't have. In the state of Texas, we're what's called a non-disclosure state. So you might hear that the house down the street sold for $1 million. And really, we go look up, we get the data, we find out it sold for $850. And sometimes the rumor mill is just not correct.
Yeah, and where do you think people get those rumors from? Zillow. We're a non-disclosure state, Zillow. We cannot post our house prices. So if you see that your neighbor sold for $500,000, but you think yours is worth $1 million, probably is worth $1 million, not $500,000. So
yeah, Zillow is literally a coin toss on whether it's anywhere close to your value or the neighborhood home. That being said, when we work with new construction, this is something that comes up a lot.
Yeah.
Individual buyers walk into that beautiful model home, they talk to the sales rep and they go, oh my gosh, yes, I love it. They sign the paperwork and they start building. And as much as that is an option for you, just keep in mind that the sales rep sitting in the model home represents the seller. They're basically the listing agent, which means they are only looking out for the best interest of the seller, that property that is being listed. Whereas when you hire a realtor to represent you, we are there looking out for your best interest as the buyer.
Yeah, and we go through that entire process with you. The builder doesn't care about your opinion, I'll be completely honest. They just want to get the job done, they want to get paid, and they want to get out of there. So having an agent is very, very helpful in that scenario. If you ever have issues with the builder, that's where we come in as well and we advocate for you.
Absolutely. Okay, Andy, what would you call mistake number 3?
Mistake number 3 is buying way more house than you can afford.
So what we go into these approvals, especially if you go online, right? Go into one of these online approvals to see what you can afford. You put in some basic information and they kick back a home price that is really exciting. Maybe suddenly you were like, I can get a loan for $700,000. Then unfortunately, we start talking to a lender, we start looking at down payments and taxes and insurance and all the things that go with it. And that monthly payment may not actually be comfortable for your lifestyle.
Yeah, for sure. I mean, sometimes you're like, oh, wow, an $800,000 house sounds great. And then you realize the monthly payment is $5,000.
As we're talking about adding this home payment, right? Most of our first-time home buyers, or maybe even you're buying your second or third home, right? You have payments that you're making right now. You have car payments and you have maybe your health insurance and you have your normal utility bills and all of those things that go into it. So, we take into account that current today's mortgage or today's rent, but then when we want to throw some additional things on top of that, that's where it can get a little tricky. Consider things like, do you like to go on vacation? Do you like to eat dinner out occasionally? So you really don't want to get yourself down to $0 every month so that you can be house poor. That's not really a fun place for anybody.
Yeah, you want to be in a comfortable position where you enjoy life, you have a beautiful home that you can come home to and go to sleep and wake up and do everything else the next day. So I think it's something that's you really need to think about. You don't want to be able to not be able to go buy a new car because you bought a new house and you need a new car because yours is breaking down. There's pros and cons, there's positives and negatives. So just something to think about.
So another thing that keeps coming up on this approval amount right now is we have had some pretty big fluctuations in interest rates over the last year. So we've gone from 3 and 3.5% up over 7% during this last 12 months. So that has made a big difference for buyers that were in the market. And as much as I know it's super painful to feel that loss of the total home value that you can afford, right? Because a loan at 5% versus 7% is very different. I really just want to kind of impress upon you the importance of buying real estate in order to build wealth in the long term. So back down that budget, reset our expectations. Let's buy the best home in a market that has future potential equity growth and really help you build some equity over the next couple of years to allow you to make that move up. And as we see these interest rates fluctuate back down, which we do expect that they will, just imagine it's like free money in your pocket when you get to refinance. And now suddenly you're making $300 or $400 less a month to your house payment. That is a car payment or a vacation in a lot of cases.
And something to think about as well is if you buy a cheaper home that you can comfortably afford, a few years down the road, you can take out that equity there. And there's personal line of credits, there's a HELOC. You can take that equity and go buy a second home, use that other one as an investment property. So
yeah, lots of options to grow your wealth with real estate. Okay, Andy, for mistake number 4, we touched on that credit report and credit number a little bit, but really, what are we seeing? People kind of show up and they're just like guessing at their credit, right?
yeah, they're like, well, the last time I checked it 6 years ago was a 650. I'm like, oh, wow, we should probably look at that again.
Yeah. So really just kind of keeping your finger on the pulse of your financial health, knowing what your overall interest rates look like, even if it is that good old Credit Karma, right? Like I said, the lender's not going to use that same score, but it's going to give you an idea of what the health of your actual finances are doing. Late payments, right, will mess you up. Having too much debt on a credit card, paying off a credit card, closing a credit card, all of those things can actually negatively affect your credit score, at least in the short term. And so kind of knowing how credit works is really helpful when the time is right.
Yeah, and if you're somebody who doesn't understand credit, I think that's all of us. There are people called credit recovery specialists. They actually go through your entire credit. They go through all 3 credit bureaus. They see how you got that score and what you need to do to better that score. So that's how we were talking about earlier with the lender. A lot of lenders offer credit recovery specialists within their lending office, so that they can help you recover your credit score. So if you're somebody that's like, oh, I have a 650 credit score, I want a 750 because I need a lower interest rate, talk to a credit recovery specialist. They're going to be able to help you. You do have to pay a little bit for it, but it's going to help you in the long run. That's honestly my biggest piece of advice if you're going to try to get into a mortgage in the next year or so. I think that's a great step.
Yeah, really just being informed, understanding what your finances look like. And when you get that first approval, you'll have a much, less of a pit in your stomach by saying, oh my gosh, I'm never going to get approved, right? We can definitely help get you there. We get a lot of calls from buyers that really, really, really want to buy. They want to get out of that rent rat race. The rates are going up all the time. And then they're just stressed out because they don't feel like they have enough money to put down. And the first thing I hear from people more often than not is, I don't have 20%. How am I ever going to save that much money? And how am I ever going to afford a house?
Yeah, so 20% is a big myth. I'm just kidding. Yeah, the lowest down payment amount is actually going to be 3% on a conventional loan. Now, that is if you have a high enough credit score to kind of get that conventional loan, right? If you don't have a high enough credit score, you can go FHA, and FHA it'll be at 3.5%. So there's 2 great options for 3% and 3.5% down that is nowhere near 20% down.
Okay, so that 20% down number, where does that come from? Why do people have that number in their head?
Yeah, so whenever you put 20% down on a home, you actually get your PMI taken off of your monthly payment. So that is payment mortgage insurance. Payment mortgage insurance is basically $150 added to your monthly payment. That's just to protect the bank that's loaning you the money. So as long as you put 20% down, you won't have to pay that, but it's not a huge expense if you only have 3% down.
Yeah, when you do the math on that, you might be looking at, $1,800 a year that it's costing you to not have 20% down. But guys, put it into perspective. If you're buying a $300,000 home, that's $60,000 you would need to offset $1,800 a year, give or take. So it's a big savings over the fact that it takes a long time to save $60,000 and get to that 20% mark.
And something to think about is if your life savings is $60,000 and 20% on a home is $60,000, you may not want to put $60,000 into a home that you're not going to be able to take out for a while, right? So you might need some more liquid cash. So putting 5% down might be the best option for you. And if for some reason you don't have the cash to pay your mortgage 1 month, you have your savings. So there's lots of options. Lenders are obviously going to be able to give you a way better recommendation as to payment and interest rates and everything like that. But we're just here to tell you all the simple facts and mistakes you don't want to make.
That's right. And as I mentioned earlier, we do this every day. This is our full-time job. So what happens when you hire a realtor to represent you in the transaction is you get to go about your day-to-day business. We know that you probably have a full-time job too, and it takes all of this additional stress off your plate. Let us go do the legwork. Let us have the negotiations. Let us send you the great referrals that we already have relationships with. And hopefully we can simplify that entire process from beginning to end. Our goal is really to earn clients for life and earn your referrals. So we want to impress you from the very beginning, from the first phone call. So I hope they'll reach out to us. How can they find us?
If you're a buyer looking for more information, you can click the buyer's guide down below to see all of the information from the Haven Home Team, how we can help, and you can follow all of our social medias down below. And I hope you have a good rest of your day.
That's right. Like and subscribe so that you see us here each week. Bye, guys.